I've had a few guys ask me about the pattern that you see in front of you here on the 4-hour Swissy chart. They asked me whether it was a pin bar pattern, a bearish one at that, and whether they should have traded it. And some of them did trade it, and they asked me where they should set their targets and stop losses and so on. So I thought I'd make a quick video for you guys just to give you my thoughts on it. Well, remember what we always say there at the MDM thread, guys. If you get a pin bar or any price action pattern that we will follow, if it develops off resistance or support, yes, it's a pretty valid pattern, and that's what we look for. We prefer them to develop off support resistance. It just gives extra weight to the pattern. So as you can see, this pin bar that I'm pointing out to you, roughly the red one there, it developed off what? A 200 EMA that was pointing down, and also a PPA. So you've got a confluence of resistance areas. You've got the Swissy respecting the PPAs. It went down, moved up, moved down, back up again. And, so it's been respecting the PPAs for a while now. You've got the confluence. You've got the price action pattern that developed right off that area. That's money in the bank. So what we do, you set your entry just a little bit lower than the pattern, and you wait to be triggered. Now, if you remember, we don't like to trade in the face of PPAs, and we don't like to trade into the face of EMAs either. And here with the 89 EMA was right below as well. So you would have been trading into the face of an EMA. So how do you handle that? Well, if you're convinced that the EMA is giving you signs of bearish action, like in this case, you've got the EMA, it bent over and it started pointing down, similar angle to the 200. So there's good angle and separation on the EMAs, and you believe that this is going to go down. So what could you do? Well, you enter the trade with a slightly lower lot size, right? So halve your lot size, or use 2/3 of the lot size you ordinarily would. That way what you're doing is reducing your risk and reducing the mental anguish that you would have, so that you can make a clear and informed decision. So what you need to do is you enter with a lower lot size, and the minute you get 20 to 30 pips profit on this one, just move your stop loss to break even. That way you'll feel safe. You might get stopped out at break even, true, but the point is you want to feel safe. You don't want to create any fear in your trading. So once you've got your stop loss to break even, it's a stress-free trade, and then you could just write it out for what it's worth. So a lot of guys ask me as well what the target should be. Well, just have a look at the way the Swissy's been moving, to the bottom of the PPA, to the top of the PPA, to the bottom PPA, back to the top PPA. Where do you think the next move is going to go? Well, the logical assumption would be to the bottom PPA, not so. Now, we can't say what the market's going to do. We just wait for it and let it reveal itself as to what it's going to do. But what we can do is we can target the logical area, and the logical area would be the bottom PPA. So wait for 20-30 pips, get your stop loss to break even. The worst that can happen to you is it can come out and stop you out at a zero loss. The best that can happen is it can move down to the next logical level, the bottom PPA, and you can score quite a few pips off the trade.